What's going on, guys, and welcome back to another video. So with the overall markets in a fairly volatile state over the last few weeks for the likes of the Chinese tech stock crash, which we made a video on yesterday, I thought today would be a good chance to take advantage of this fear in the market and take advantage of dollar cost averaging into stocks that are currently down in value within my portfolio. So with all that being said, let's dive right on into today's video. Now here we are on my Trading212 portfolio, where we currently have about 10,850 euro in my account overall, and we're up 1,877 euro, or just under 22%. Now you can notice here we have 400 euro in free funds, which I'll be investing over the next few weeks. Now it is very important in times like these to have cash reserves sitting on the sideline to take advantage when the markets do dip, not even a full-on crash, but when they dip, to take advantage and get in at a cheaper cost by getting your overall average cost down. Now, again, most of my stocks are not in the Chinese market. However, this will definitely have a ripple effect, as we discussed in yesterday's video, on the overall global economy in terms of the stocks, because people will start to have a bit of fear and panic, effectively selling out of their stocks, and also other people shorting these stocks as well, because you can make money as well if you short stocks and they go down in value. We can even see on my 1 month chart here on the left, it's been quite choppy, and this is a 33 stock diversified blue chip portfolio. I'm kind of emphasis on the words diversified and blue chip because, again, it doesn't seem like it's that volatile, but for this style portfolio it kind of is. And again, it's not just due to the Chinese crash as such. There's a lot of implication factors. A lot of people think inflation is getting too high. They think the bull market might be coming to an end, etc, etc. And again, in my own personal opinion, a lot of these stocks are overvalued at this moment in time. But again, as a long-term investor, I kind of welcome crashes, etc, and even dips, because it just means you get in at a cheaper cost if you have a long-term kind of approach and outset. So by remaining calm and not selling any of your stocks, if you believe that the fundamentals haven't changed, if the markets are down, that will bring every stock down. But if the fundamentals haven't changed and you believe that they will bounce back, then why would you bother selling your stocks? If anything, you should be buying more. So now we're going to have a look through my overall portfolio to see how many stocks are currently in the red. So after very briefly looking through my portfolio there, 5 of the 33 are in the red. Now that's about 85% of my stocks are in the green and 15% in the red. So again, those 5 stocks I'm quite happy with, because it means I can get in at a cheaper cost. Also, there's 4 stocks on the 3 month charts that are in the red also. Now again, that's one of the main reasons, besides diversification, why I have so many stocks within different sectors, 33 overall as it stands. The main reason here is to take advantage anytime any of these stocks go into the red. Now, because I hold these stocks a good few months at this stage, a lot of these stocks will not go back into the red in my overall value. For example, some of my stocks are up nearly 100% at this moment in time. So that's why I start looking at the 3 month chart as well, because as a long-term investor, that's what you'll have to do, because as I said, these stocks that are up nearly 100% won't go back into the red anytime soon overall. So you need to start focusing on the shorter term time frame charts as well. So again, overall, there's about 9 positions in my overall portfolio, which we'll have a look at now, that are currently in the red. But when I look through which stocks I'm going to invest further in, I just usually throw down a very basic Excel just to see, away from my overall portfolio, what's currently in the red, because it takes away all the noise and just puts it on a blank Excel. So we can see here we have 5 stocks currently in the red in my overall value. Barrick Gold is on 1.6, First Majestic Silver is down nearly 13.5. Again, we have tiny positions in these 2 stocks, so I'm actually quite happy that they're in the red, because it's a lot easier to get in a dollar cost average there. High Tide is down at nearly 30% at the moment. Again, this does make zero sense. If you look up the stock fundamentals and catalysts, which I made many videos on at the moment, it does not correlate at all to the current stock price. So we'll discuss that in a bit more detail later on. iShares is down 7.8% and Tesla is down 0.066%. So again, that's the 5 that are in the red overall, and we have 4 that are in the red on the 3 month charts. Bank of America is down 4.76%. Now all 5 of my financial stocks are doing very well. They're probably some of my best performers, so I was quite surprised to see it's down 4.76%, and I haven't had a chance to dollar cost average into any of these 5 financial companies over the last 6 to 8 months, I say, because they've been going up in value. So that's kind of good news as well to see. Caterpillar is down 8.88%, Chevron down 2.02%, and Walt Disney on the 3 month charts is down 2.75%. My plan for today, with the 5 stocks that are currently in the red overall, we can see the bottom 3 here are highlighted in red. I'm not going to be investing further in these 3 today. Now, there's 3 reasons, obviously, one for each of these stocks. Firstly, High Tide is down 29.65%. Now, if I was watching this video, I'd be like, hang on, this is a great opportunity here if it's down to 30%. However, I do want to leave it go another about 2 to 3 weeks to see where it is, because I do feel it's going to go down more in value. Because as you know, if stocks start to go down in value, it drops a lot faster than it goes up. So I do feel that at this moment in time, by looking at the charts, it will go down further in value. That's why I want to hold off, because I want to get in at a cheaper cost. Again, I could be wrong, and if it goes back up in value, well and good, I'm making more of a profit. If it goes down further in value, well and good as well, because I'll be able to get in at a cheaper price. So doing this, it's a win-win either way. iShares is down 7.8%. Now I've been dollar cost averaging in here a lot over the last few months, and it's still down 7.8%. Now I'm holding off here, and I'm going to wait until it gets down to over 10% in the red. Then I will start to action again. Now the main reason for this is because most of my energy pie, which has ExxonMobil and Chevron as the two older school stocks, and this ETF, the clean energy, this is taking up probably 80, maybe even 90% of the overall pie or portfolio in that sector. So that's why I believe I'm overweighted in that position. So that's why I'm going to wait until it goes down at least 10%, and I'll action further again. Tesla as well. Probably the reason here is if this was down further in value, I would certainly invest further, even 2 or 3% I would. But because it's down just over 0.5%, there's definitely other stocks within, as we can see on this Excel, that are definitely better suited to take advantage of dollar cost averaging today. We can see here my materials pie, we only have €142 invested at this moment, and it's down 8.33% overall. So I'm quite happy that I'm putting another €30. Again, €30 mightn't seem a whole lot in comparison to nearly 11,000 in my overall portfolio. But again, slow, consistent dollar cost averaging, which will make all the difference long term. It mightn't be the most exciting side of investing, but it certainly is effective, and it's very easy to do. Anyone can do it, that's why I like it. So again, we'll be putting €30 within these two stocks, Barrick Gold and First Majestic Silver today. Now we have that order in. We can see here the investing will take place, and the order will be filled once the New York Stock Exchange opens. So that's my overall stocks that are in the red. That's what I'm doing today. Only €30 because I'm investing 110 of the 400 today. So now let's look at the 4 stocks that are currently in the red on the 3-month chart. Now it's worth noting that my overall position is in the green, but in the 3-month chart, it's currently in the red. So long term, this will definitely have to take place, and this is a great way as well to dollar cost average. Bank of America is the first of these 3-month charts that are in the red. It's currently up 58.5% my overall position, which I'm very happy with. However, on the 3-month chart, it's down over 4%. So I'm going to put €20 in here today. Now, again, I mentioned earlier that I didn't have a chance in about 6 to 8 months to invest further in any of these 5 stocks. We can see up here, we're up 42.24% overall in this pie. So it's quite welcoming to see one of these stocks go down a small bit in value. Again, as crazy as that sounds, but again, it just means that I'm getting in at a discounted price on the 3-month charts. Next up is Caterpillar, down 8.88% on the 3-month charts. Overall, my position were up 20.74%, a very small position, only €64.32. This kind of shows the importance as well of looking at the shorter term charts instead of the long term charts, because again, it might be a long time before Caterpillar goes back into the red overall. So this 3-month chart dollar cost average is very effective as a long term investor. My industrial pie is up 27.8% overall. So again, we'll be putting €20 into Caterpillar today, as it's down in the 3-month chart. Up next is my energy pie in the form of Chevron, which is down about 2.2% on the 3-month charts. Overall, we have €813 in the energy pie and up 4.84%. Now, what's really dragging this pie down is, as mentioned earlier, the iShares Global Clean Energy ETF. We have €550 or so, or just under that, invested in this out of the 813. That's why I don't want to invest further for now, because we're really overweighted within this position in the energy sector pie, which is currently down 7.78%. Chevron overall is up 28.25%. So again, this is kind of handy because I do want to start pumping these positions up. Chevron, ExxonMobil, for example, ExxonMobil here is up 70.6%. It's going to be a very, very long time before that goes back into the red overall. So 3-month charts again, I can't stress it enough. It's very important if you're dollar cost averaging. The final stock I'm investing in today is Walt Disney in Communication Services, which we currently have €765 invested and are up 38.71%. So again, just like Bank of America, etc., I'm very welcoming here in terms of buying more of these stocks, because I haven't in a long time because they've been going up in value so much. Again, it's down about 2.75% in the 3-month chart, and my overall holding is up 32.65%. So again, it's very simple, and again, there's not one bit of complication within this style investing, so anyone can do it, and I'll just be putting a further €20 today into Walt Disney. So after making all of those orders, we currently have €111.42 in pending orders once the likes of the New York Stock Exchange and the Nasdaq open up today, and those orders will be filled. That leaves about €290 in free funds. Again, this is very kind of boring methodical style investing, but again, it's very effective long term. So I do this week in, week out, €100 or so every week. Again, it was 111 this week, but next week it might be 90 or 100 again, depending on how many stocks are currently in the red at any given time. Now, it's worth noting also that I will continue adding into my free funds cash reserve on Trading212, where we currently have €290, but I want to get up to minimum 500 because it's inevitable over the next few months, especially with the likes of these warnings from the Chinese markets that are dropping very drastically in value, that again, it's inevitable that a market crash or even a big dip is on the cards. So we even saw from March of last year how lucrative it would have been if you invested more capital then instead of panic selling or kind of a lot of fear in the market. So again, markets have to go up and down as they're cyclical. So again, having a cash reserve is key, and I can't stress that enough. So in summary, the two stocks we invest further in today are €30 are both materials, Barrick Gold and First Majestic Silver, two stocks that are currently in the red in the overall value in my portfolio, and then four stocks that are down on the 3-month charts. We put €80 in here into Bank of America, Caterpillar, Chevron and Walt Disney. So that's the end of today's video. I'd be very interested to know in the comment section below what stocks you bought or are looking into this week. I'd be very interested to know in the comment section below. So thanks very much, enjoy the rest of your Wednesday, and we'll see you all in tomorrow's video.